Spanish bond yields are reaching a new euro era high this morning because the Spanish government said they expect GDP to contract more than expected next year. NRG Energy is offering $1.7 billion to buy GEON Energy, which would create the largest competitive rate power company in the U.S. I'm Lindsay Bell, and the morning call starts right now.
Good morning. I'm Mark Sperling with T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. On Friday, we saw the Dow and the NASDAQ move into negative territory for the month of July. The S&P 500 was hanging on by a thread, but this morning, stock futures are pointing to a big down open here. Thanks to more news out of Europe, we've got Spain and Greece worrying investors today. How are you setting up trading going into this day?
I didn't expect us to be down this much, at least Monday morning, but I'd ideally like to see us close above our 20-day moving average, which is roughly around 135 on the spiders. We'll have to see if that happens. But right now, I have a daily chart on the spiders up. We are living in an ascending channel, which normally does work itself way to a bearish type pattern. But we've been living in there for about six weeks now, so we'll have to wait and see. Every time we get to the top end of the channel, we get some sellers. Bottom end, we get some buyers. We're smack down right in the middle, getting closer to the bottom end. We're just not quite there yet.
What about volatility? The VIX really hasn't played too much of a part more recently in investors' minds, but where do you think it's going to go going forward?
Well, it's funny. Every time the VIX becomes irrelevant, everybody that no one's talking about it, that's when it starts to catch some wind. And, you know, the VIX has really been hanging between the 16 and 18 level for a while. Once we get about 20, 21, you get some excitement, and then it's short-lived, maybe to 22 to 25, and then we come back down. I have the VXX. It's a trading vehicle. At this point in time, it's been irrelevant, but it looks like it's catcher and its 8-day moving average. Ideally, I'd like to see it get back above its 21-day for me to see any real movement. Right now, it's still just a vehicle to look at until we get above 20 to 21. Not so much to there, but it's not bad to put. It's cheap to put on risk at this point in time.
Right. Now this week, your headlines will clearly be a key factor in the week, but we're still in earnings season. We have 175 of the S&P 500 companies reporting earnings this week. Tech's going to be a big sector that's coming out. Apple, for one, will report on Tuesday. Now, these guys have typically underpromised and overperformed always. They always beat their earnings estimates, but there are analysts out there that think they were out last week saying that these guys could actually miss earnings this quarter, because of weakness out of Europe and China, as well as a late introduction of the MacBook Pro refresh. That being said, they're still looking forward to their first quarter earnings, which is not the current quarter we're in, but the upcoming quarter, because we've got the iPhone 5 coming out there, and we should see momentum with that stock. Last week it was pretty volatile for this stock going into earnings, so you're trading it going into the report on Tuesday?
Well, I end up trading it every week, whether I like it or not. And at this point in time, it's living in a range, and it's been living in there for the past 2 weeks. Every time it gets around 600, I know it's below there this morning. I do look to, dip my feet a little bit. 620 resistance. So today, from a trading point of view, I will be looking around 598. That's roughly the 21-day moving average as a place to get involved. Keep a tight stop as always, but look for a move possibly back to anywhere from 605 to 610 level. If after earnings it comes out and it beats expectations, I'm looking for 620 will be the trigger buy. Below that, watch out. This market gets hit. I do understand where the analysts are coming on and saying possibly it could be a little light. There really has been no product release, which again, from a fundamental point of view, makes earnings a little light.
Yeah, you might find a better entry point in this.
It's still best in breed either way.
Exactly. Now, Facebook, this stock is going to report their first earnings report as a public company Thursday after the close. Of course, people here are looking to see how fast people are switching over to mobile, and if the company is being able to monetize that. That's going to be the key for that one. The stock's had a little trouble getting above 30. What do you think about this stock?
Let's talk technicals for a point of view. It opened at 38. That's the IPO price. Is it going to get back there this year? That's the question. We'll have to wait and see. Earnings have to be spectacular for that to really come into play. Right now, technically, it's not showing anything exciting. It's living below its 8 and 21-day moving average. I don't like that in general. a move above 33, 34 possibly will get me a little bit more excited. I will be buying it anywhere from 27 to 26. I think is a fair place to at least get involved, dip your feet. That's been rewarding those, discount buyers. But overall, it's living in a $4 range at this point in time. I think that's the key.
Yeah, exactly.
Don't overtrade it. That's the key.
Okay, no overtrading Facebook. How about Amazon? This stock has 4 up days last week out of 5. One of those bounces came on the back of eBay's earnings, which were pretty good. That a lot of investors are out there saying, well, if eBay did well, then Amazon has to be doing well. Though there is the skeptics that say that eBay may be taking share from Amazon. Regardless, I think going into this earnings report, investors are going to be focusing on third-party sales and margin expansion. Third-party sales are basically merchants that have their own little website on Amazon.com and sell their products alongside Amazon products, and Amazon collects a commission on that. So the margins on that are a lot better. But is the stock going to be able to break through certain resistance levels that it's seeing now?
Amazon never seems to beat expectations across the board. I'm a little surprised that it actually did come out of that little base, come to the top end of its range, which is roughly 230, which is at this point 231, 232. A little resistance until it gets above there. If it gets above there, after earnings, it will be a new buy for traders from the long side. Technically it looks good. The fact that it's hanging up here and it's trading now above its 50 and 21-day and 8-day moving average, all pointing up. Earnings are going to be the telltale. But overall, technically, it does look good this week before earnings on Thursday. Roughly around 225. I'll probably be looking to dip my feet again. And at new highs at 231, I will probably get a little bit more involved.
Okay, cool. BIDU, this is basically China's Google. This stock has been really beaten up this year. I don't think anyone's expecting great out of the company. They're going to report earnings today. The stock in pre-market is trading down again. It seems like every time this moves up a little bit, it just goes down lower. So what do you think?
It's certainly been has had downward pressure for a period of time at this point in time. It had a little bit of capitulation last week when it went below 100, which was a little bit of double bottom on a weekly chart. Now we're back to resistance again at 112, 115, 112, 113. Probably you'll get some selling back to the 105, 104 level where we'll live before earnings tonight. And we'll have to wait and see what happens. Right now, technically, it's not telling you it's going to do anything spectacular, that's for sure.
Yeah, exactly. JNPR is a stock that, another one that hasn't been so great this year. Their revenues and earnings have been pressured by weak infrastructure spending. They've got Cisco breathing down their back. And then this is another one that the product revamp is coming up in the future, so people are just sort of waiting around. The stock, they did announce a $1 billion buyback last week. The stock's been trading up going into earnings tomorrow. So I don't know, what levels do you think that the bar has been brought down low enough for these guys? It
might have. You obviously had 2 or 3 good days that brought the stock on at least on a daily chart above its 21-day and 8-day moving average, which I do like. Still far below its 200-day, which is almost $20. It's pretty boring at this point in time, and obviously we'll have to see how the industry as a whole plays out. But a trigger buy will probably be above 1650, and you might get a quick move to 1850. It's not a long-term hold of mine, or I'd be looking for it just as a quick trade. And new lows obviously would be below 14. I don't think it hits there either. So I think it's just going to live within this range. The trigger for an aggressive, from a buy point of view, is above 1650.
Okay, so those are some of the tech stocks that we're looking at today going into this week of earnings. It's interesting because it seems like mediocre results have rewarded the stocks so far this earnings season. But we're going to take a quick commercial break and get back into it with some other strong sectors that we're watching.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to take a look at the home builders because this has been a really strong sector so far this year. We've seen housing improving, though last week I think we got existing home sales that were a little weaker. This week we'll get new home sales, and if that's stronger, that's going to benefit the home builders. Why don't we take a look at the XHB? That's been really a great vehicle.
The home builders have been a decent trade at this point in time for almost the last 6 months, 8 months, and they usually are 6 months, 8 months ahead of obviously the normal housing market. Technically, they look good. This is the ETF that we look at, and not that exciting. But every time it gets to around 20, 50, I would be looking to get involved. And here's the weekly chart just so we can see it. It's a little bit more relevant. You can see it's forming a nice high-level base above the 1950, which is its 200-day moving average. As long as it holds there, I think you're good to go on the home builders across the board, buying on pullbacks only.
Buy on pullbacks only. Why don't we take a look at some of the specific stocks? Toll Brothers is one of the bigger names that everyone knows. What's that stock look like these days?
You certainly want to find the best in breed, and it seems like Toll and Lennar are in that top category. This is a nice high-level base, and it's a bull flag across the board on all time frames. And to me, it's not that exciting from an intraday point of view, but they seem to be grinding higher, and every pullback is viable into whether it's a 21-day or 50-day moving average. So it made a new high on Friday in a down market. I think that's good. I think that's showing some real strength. Let it pull back again. Look for some opportunities. But let's look on our weekly chart, and let's look on the monthly chart. You can see what they used to do. These stocks were very relevant for many years. Back 2007, you're looking at 35 as some resistance at this point in time. We're not there yet, but at the same time, I could see us grinding back to that level on the Toll, and we'll have to wait and see.
And Lennar, similar sort of story you're seeing there?
Well, I'll put up the monthly just so you can see it. Again, you can see almost 40 to 45 as next resistance. Again, this is monthly, a little bit longer time frame, but look at the daily. Nice bull flag, high level base. It's what you want to see. Every pullback seems to be viable. You get new buyers coming in. That's how you have to trade this, in this industry right now. Every buyback into key moving averages are viable. Right now, I would probably be adding, around 29.50-ish, and looking for a new high. Probably take a little bit off at that point in time.
Okay, gotcha. Ryland's another one. It's been a great stock as well. So why don't we take a look at the chart and see what levels we should be watching there?
Rewind again. It's same type of trade, same type of play. Again, probably 25 would be the level I'd be looking to get involved, 24.50 if you want to be a little bit more exact. For a short-term move, back to new highs, 27, 27.50. And every time these stocks make new highs, they seem to pull back another 1-2%. So again, you just have to make sure you get the ebbs and flows of the tape across the board, but understand we're in an uptrending industry, and you buy on pullbacks.
And just one more for good measure, Meritage. Let's take a look at that stock.
MTH. Again, the key is, I know a lot of guys like to go on the cheap ones. You want to go with best in breed. I always say that across the board. Best in breed is key. You want to go with the ones that look the best, have the best looking charts, have the best earnings growth going forward. The ones I'm mentioning, these are best in breed. I think that's just key to recognize. So Toll, Lennar, Ryland, MTH. 4 of the best in breed in my opinion.
Another area of strength that we've seen in the market is the eggs, and part of that's due to the drought that we've seen in the U.S. here, rising grain prices and meat prices too. Why don't we take a look at some of those stocks there that you're watching?
The ag sector has been super strong, and again, as Lindsay said, it was because of some of the drought conditions we've had across the board. Some of the corn prices, how they've gone up. Excuse me. CF, best in breed at this point in time. Anywhere from 198 to 200 is where I look to get back involved for a move to new highs. I'll put my weekly chart up just so we can see. It's at new highs going back 2 years, 3 years at this point in time. And CF is actually at all-time highs. So looking for the sweet spot, in my opinion, 198 to 202 is where I look to get involved with that one. AGU gapped up the other day above 92, which was a trigger buy, and every time it gets back to 93, it should hold its 8-day moving average at this point. These are all uptrending stocks. It's an uptrending industry. If you're looking for strong stocks, certainly in a strong tape, it's a little easier. But in a weak tape, if you're looking to buy, this is the industry you want to buy on pullbacks.
Let's get into some quick hits. First, we're going to start with WYNN. These guys reported earnings last week that were much weaker than expected. The stock has been weak in general. It's trading below all the key moving averages. Is there any way to trade this? Do you stay away from this? How do you play it?
You could have asked me that a few months ago, and I was trading it often. These days, I do not trade it that often. I look at LVS here and there. I look at WYNN here and there. It's been living below its 200-day for a period of time at this point in time, and even below its 21-day. Not a great-looking chart. It's forming a high, a low-level bear flag, basically. Do I think it's going to move down? Not sure, but play the ranges. Looks like the lower end of the range is 95. Anytime it gets to 105, it's a sell. Until it breaks below, out of one of those ranges, it's just living in that little world.
Yeah.
And LVS, same type of trade.
Same thing.
Yeah.
Goldman Sachs, this had 3 consecutive down days. It broke its 20 and 50-day moving averages. This stock, what pivot level should we be watching here?
So Goldman, 4 days down, I'm not the guy who's going to be putting on new shorts. It's just not how I trade. You have to have your strategies. You got to go with what works for you. Doesn't look great on the chart, but again, before earnings was right at 100. After earnings, that was the top, and 4 days of consistent selling. Look for 90, looks like 93 and change, first level that it should try to hold. Then after that, you're looking at 90. 93, again, if you're going to be looking to get involved, quick stop at 92. Look for a move back to 96. Maybe it can recapture its 21-day moving average.
Caterpillar is one that I know you've had your eye on. We talked about it last week. The downtrend here seems to be in control, though. So how are you trading it this week?
I've been talking about, I have no swings on just about at this point in time. We're in the tape where it's just cash flow, and 1.5-day moves seem to be the only way that you can take advantage of this tape. And Caterpillar's the same type of play. Hit its 21-day moving average 2 days ago. Had some consistent selling. Until it gets above there, no reason to really get aggressively long. But at the same time, I'm not shorting. It's just getting tighter and tighter the range. It looks like 79.80 is some support. Keep that in mind. That should hold until it doesn't. Okay,
and gold, this has a wedge that's forming that's getting tighter. So what are we expecting this one to do?
Gold is wedging. I've been avoiding gold for the most part because every day seems to be a reversion to the mean. Every time you think it's going to go one direction, it seems to move the other direction. So let the market tell you. Let the commodity tell you when it's ready to go. It looks like technically above 155.50 possibly could get a new move, maybe to the 158 level. That has not worked textbook at this point in time. And then vice versa, below 152. Looks like a new move to around 149, new lows. The longer we stay in this base, the next move out of that base, that will be a continuation move. We just have to wait and see.
Well, those are some of the levels on the S&P that we're looking at today, the sectors we're looking at. We're watching tech as we get into earnings season, and we're keeping our eye on that strength in the home builders and the ags. So that's our plan for this week, for today. Be sure to check back in with T3 Live and the team to see their daily recap.